Da-da-da.
Hi, everyone. Welcome to TimingResearch.com, crowd forecast news for June 11th, 2024. We are recording this at 1 p.m. Eastern Time, and this is episode number 433. My web host was down yesterday, so we couldn't do the show as normal, so this is a special Tuesday episode. And uh, the option professor is here, and he's going to be talking about strangle option trades today. So you should be seeing his screen, and I'm going to go ahead and turn it over to him.
Okay. All right, David, thanks for the intro. Again, this is Jim, the option professor. Before we get started, I just want everybody to know that options involve risks are not right for everybody, and you should be consulting your brokerage firm to find out what is right for you, what's suitable, and what's in your risk tolerance wheelhouse. I am going to be sharing my opinions today. I am not giving any advice. So I'll be explaining how I feel and things that I might be involved in, and basically that's what I'm doing. So again, the advice is supposed to come from your broker, not from me. Okay, so let's talk about what's going on. I have Apple up there because I'm having a very nice day with that, but I'll go over and we'll start out with SPX. Now, I'm going to cover a lot of stuff here, so I'm going to get going because there's a lot to cover. I'm going to be going over the general markets. I'm going to be going over different sectors. I am going to be going over the interest rates, and I'm going to be going over some very small price stocks that some people might want to take a look at, because I know some people like that kind of stuff. And yeah, basically, I'm going to try to give you a little overview. Now, there's your S&P on a let's put up on a 5-year basis. Okay, now somebody says to me, "What's my opinion on it?" Obviously, I've been very positive on it, but I'm concerned up here, and here's why. The RSI was up here at 73, and now it's in the 69. So it's running out of a bit of steam. Now, tomorrow is going to be a huge day. Do you know why it's a huge day? Because you got the CPI coming out, which is supposed to be pretty benign. So if there's a big surprise number there, that's going to affect the market. Bigger yet, though, is the dot plot. The Fed is going to talk tomorrow about the dot plot. And here's the thing with the dot plot. Every other seminar meeting, they come out with this dot plot, and what that is they give you a guess on how many cuts there might be. Now, last time they did the survey, there was like 3 cuts expected. So when they talk tomorrow, if they say 3 cuts, 2 cuts, 1 cut, no cut, it could have some significant effect. So we'll have to see. The unemployment situation still seems to be pretty firm. Yes, the JOLTS report is only 1.2 jobs for every one person rather than 2 jobs for every one person, but it's still over 1 to 1. And the wages are going pretty good at over 4% annualized. So, people are making some money and they like to spend their money, and they are, after COVID, they're figuring you only live once. And so they're out there doing a pretty good job of it. Are there some slowdowns here and there? Sure. Now, here's my thought. I think it's going to have a pullback, but I'm not going to do anything about a pullback until I have evidence. You understand? I've been doing this a long time, just so you know who you're talking to. Decades of experience, trained at the Options Institute in Chicago, traded thousands of these options in my life, and millions of dollars in stocks. So I'm not the guy who fell off the turnip truck. Okay, so there you go. Why? So I am looking, at some point to get a pullback. But, there's guys like Tom Lee talking about 5,500 by the end of the month. You got Goldman Sachs saying a wall of money is going to come out of money market, and that's possible. And the way the market is set up right now, you've got to kind of think that could happen. Because again, the trends are up. The trend and when the trends are up, the surprises tend to be to the upside. Okay? But when they get this far away from their averages, it's set up for a reversion to the mean. And that's what I'm talking about. When will that reversion start? It'll start when it starts. If I was a guessing person, when do I think the radar should be up? Obviously, July, August, and September. Aren't those been the tough months, for the stock market historically? Maybe a June or July top, and then August, September, going into October could be a tough racket. So, and how long does 90 days take? Not very long the way I'm living, So the bottom line is that a little bit of patience could be very good here, because if you're shorting it against the trend, you're just getting whacked every time you try to do it. okay? Turning towards the 1 year graph, but again, you can see the RSI is not really that great. Now, if we blow out 53.50 and 53.75 and you jump up to 5,500 like Tom Lee's talking about, then this RSI is going to pop again, and then you're back in the market. Then you're back on the bull side. Right now, it's oscillating. Why is it oscillating? Because it's had a big run, and it's not in a downtrend. So obviously it pulls back, but there's buyers because the trends are up, right? And the RSI is above 50, right? And the VIX is in underneath 15. So big money doesn't mind putting money into that kind of thing, right? Why not? VIX is relatively low, which means my money is not going to go nuts up and down, right? And you've got a trend that's clearly up, and you've got everybody 100% guaranteeing themselves in their mind that the next move by the Fed is a cut. And with that kind of backdrop, now here you go. We get under 5,300 and stay under there and get these lines to point down, then I'll be hitting it. Because I see potential down to purple and gold. And purple and gold would be pretty big drops. What would make that happen is obviously if these earnings ever go away, because the valuations are through the roof. So you imagine if you took away the earnings, the valuations are so high, of course you'd get a big drop, right? So again, very critical area up here because again, RSI, is having some trouble up here at 70. Now it's in the 64s. So, I'm seeing a little bit of running out of steam, nothing dramatic, but enough for me to go, hey, listen, let's keep an eye on this baby. Because if it does start rolling over, by the time it goes down to 5,100 or 4,800 or something like that, it'll be too late to start doing the selling. So you don't want to be early, but you certainly don't want to wait for the drop to occur and then do it. So that's what happened here. You see, you get the rollover right here, and that's the time you got to start nailing it. If you want to wait and start selling it down here, you're going to get whacked. Okay, so that's why you got to be careful about when you get in. All right, so anyway, that is the story on the S&P. And again, my feeling on the S&P is wherever the S&P goes, the other two follow like little Bo Peep. So let's look at the tech stocks. QQQ. I'm giving the broad strokes because, whatever you're in the S&P, if the S&P tanks, your stocks are probably going down. If it goes through the roof, your stocks are probably going up. If you're in tech, this QQQ starts tanking. Believe me, the tech's coming down. If it doesn't, obviously, that's a good deal. All right, so same story here. Let's go back to the 5-year just to get an idea. And obviously, this thing's had a big run. Big run. Let's go. Come on, keep buffing here. There you go. All right, so anyway, again, why do I like my indicators? Because look, we down here, I'm going to load up. We turn up, I'm double loading up, and I'm going to let it ride. If it pulls back, I'll buy some more. If it pulls back, I might buy some more. But I don't buy onto strength, because if you buy into strength, then you got to go through these pullbacks, and I don't like to do that. Okay? So bottom line is where are we here? We're at 69.70, and up here we're at 66. So again, not a big divergence, but it is definitely losing a bit of steam. But that trend does not tell you to do any selling yet. 1-year graph, same story, 68.70. Now we're up at 68. So no divergence. But again, if we start breaking under 458 and we stay under there and these babies start turning down, then I'm going to be concerned that you could go down to purple or gold. And if you go down to purple and gold, a pretty good little drop. But again, ever since last, and again, where do you want to buy stuff? When it comes down and it supports. That's where you want to buy. Okay, so there you go with that. How about the small caps? Again, those are the basic 3 areas, right? You got your S&P stocks, and they're the Magnificent 7 anyway. And then you've got your tech stocks, and now you got your small caps. Now, again, if I hear more people telling me that the small caps are the place to be, well, maybe they are, but you know what? It's still a little bit early here. So let's take a look. Now, again, as long as we stay above 185, 186, you can still buy the story that we have a bull market here. Okay, you could still do that. You start breaking under 185 and all these things start pointing down and you get back under purple, because when you're under purple, it ain't good. So you're above purple here, but again, you take out this 185, That's your line in the sand if you want to be long the small caps. And again, here you got 65, 65, and up here you got 60. Again, weakening and rolling over. The 1 year, obviously you've crossed over here. Blue is still pointing up. So if you can get back above, people will say, well, when do you get bullish? I get a little more bullish. You get above 204 to 203, 205. Then I can see get back on the train. But I don't want to catch a falling knife. This thing could obviously go down to 190. What I say the support was 180. So if it drops down to here, it might be a hell of a buy because it'll be above the 185 and it'll be hitting gold. So I'd definitely take a bite of it down there if it holds, right? But right now, like I say, I don't like chasing things that have already gone through the roof. That's not the way I don't think you make a lot of money. So talking about going through the roof, let's take a look at NVIDIA, some of the big stocks, and then I'll roll around. Okay, what do I see in NVIDIA? I see a big long line. So obviously something happened to this company. What happened was everybody wants their chips and they don't have the chips and they're willing to, and they can pay a lot of money for the chips and nobody else got the chips. So it's almost like a commodity, isn't it? I mean, if there's no oil, oil goes 147. All of a sudden, magically, they find oil and it goes back to 70 bucks. It's not going to be much different here, I don't think. They come up with a different situation. They come up with another chip, a cheaper chip, a different way to go. You're going to have a situation where there's going to be vulnerability. Right now, this thing is like oil at 147. It's a commodity that's in very short supply, and there's demand. So, but I've been around a long time. So when I see something like this, when am I going to start buying here? I did a lot of stuff at I think 187 is my cost basis on NVIDIA. I've just been riding the train like everybody else, but I don't want to buy the train at at Pike's Peak here. You know what I mean? Now, I don't know if it's Pike Peak or not, but I'm certainly not going to put new money in at the highest price in the history of mankind. Again, you've had opportunities in the last, well, not too many opportunities. Let's just look at this. Yeah, well, you had some opportunities. This is split adjusted now. So it pulled back here, you could have taken a shot, pulled back here, could take a shot, pulled back here, you could take a shot, pulled back here, you could maybe take a shot. But again, your RSI is up here. Let's look at the 5 year. Where's your RSI up here? Yeah, it's 81. Yeah, pretty high. And then let's look at yeah, 72. I guess with the split, the charts are a little weird, so it's hard to say. But right now, that's 62, and right now, that's 56. So again, if you start breaking under 116, you could get some selling coming in. But there's your line in the sand. If you want to take a shot on the long side, that's where I would extreme uncle. Let's look at some of the other stuff. AMD, everybody ran into that thing because they thought it was exactly like NVIDIA. Apparently, it's not exactly like NVIDIA. And so people have paid the price on running into stuff that already went up. Let me get ADM up there. AMD, I'm sorry. Yeah, again, this is where you want to take your shot if you're going to take a shot, right? Right there, 140. And you still, you got a nice little pop. Now it's come back down. So as long as we can stay above, right now, I'd call it about 153. And more importantly, get back above 170, maybe you could take another shot at that high point. Otherwise, if it starts breaking down, and right now the red line's pointing straight down, and let me tell you guys, that's not a good thing. That is at 162. So, if you want to be a seller, I would use 162 as my get out point because as long, or even the high of the other day, what was the high here? 165. Yeah. So as long as we stay under 165 and if we start breaking 150, this thing's going to have some problems. Okay, so let's look at the big guys, Google. I'm going to try to go with these because I'm sure most of you guys either own it or are interested in them. So let me give you some rundown on what's going on. Okay, Google, Alphabet. Okay, big run. Obviously, down here, you're supposed to be buying the hell out of it, right? And then as it gets pointing up, you buy, pulls back to the red, blue, buy some, pull back to the blue, buy some. And up here, this is called harvest time. Harvest for the people who planted their seeds at the right time. So I'm not interested in, giving liquidity to smart people who bought down here. So I'm hesitant to get crazy on the long side up here. If anything, I would take gains on my stock here, throw into a call option here. It keeps going, I'm in. If it tanks, all that other money I took off the table is in my pocket. That's something to consider when things get like this. Okay, and then let's look at the 1 year. Okay, so you got here at 74, you got here at 68, running out of steam, and you got here at 56, running out of steam. I say this thing's running out of steam. Blows out 180, you're back. Now, again, nothing's turned down yet. Okay, so again, it's premature to say there's going to be a substantial drop at all, but there is a gap down here to be filled. So if it does drop, 145 and 160 to 65 would be logical places to go because there's gaps there, right? But again, even on the 1 month, you don't have anything turning down, I don't think. Starting to turn down, yeah. So, right now you stay underneath 177 and 178 and keep going down here. It'd be nice to see it take out 173, and then you get everything pointing down on a short-term basis. And then on your 1 year basis, again, that would be breaking the 176. So 176, 175, 173 starts breaking that. Then, of course, this running out of steam might lead to a more significant drop. Okay, again, what are we looking at here? Meta. Again, these guys are all prime players in the AI thing. And by the way, I'm going to get to Apple because that was my trade of the week here this week. So anyway, where are we here on not Apple? We wanted to go to Meta. Okay, on Meta, here's what you're looking at. Come on, Meta. There you go. We look at a 5-year basis. Again, you'll see where you should have been buying the heck out of Meta. And that is obviously down here when it turned up on the red. Bang, buy, 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 buy. Pull back to blue, do a little more buying. Leave it alone, come down to green, buy a little bit more, and now you're long, hoping it keeps going. Red line is pointed down a little bit, and this is the deal. And this is what very important for this stock. Okay, sometimes it'll go through the lines, as you can see here a little bit. But if the lines are pointing up, this is called a fugazi, which in back east terms means a fraud, meaning it's a price that will not last. It's some kind of a short-term bologna sandwich. And you can see it here, it broke it a little bit, right? So that's a bologna sandwich. And right now, we're going to find out if this is a bologna sandwich or not. And you know where you're going to find out? If it starts breaking under 482, and then you can get the red line pointing down as it breaks under 466. So if you're bullish, you definitely, and look at the RSI is looking pretty good. So again, as I said with the S&P at 5,300 and change, the 5,500 story still could happen because that's the way things are pointing. So if you're selling it short, hoping that's not going to happen, I think you need your head examined because you're either going to be very lucky or you're going to get what you deserve, which is when you short things that are rising, you lose money. So yeah, this thing here, and like I say, it also can show you how a reversion to the mean could happen under certain circumstances, but it's not going to happen with RSI above 50. Okay. All right. So anyway, but again, will it try to take out this thing? If we're going to 5,500 on the S&P, you better believe this thing is going to take out the high. Okay. What's the other one? Microsoft. Okay. Microsoft. These are the ones that are holding up the fort. You know what I mean? If they roll, they're going to roll and they're going to be a problem. So here you go again, RSI 67, RSI 67, RSI 64, running out a little steam, right? 61. Where do you want it to start rolling over? If you wanted to get, concerned about it, it would be 417, right? And you're at 428. So again, RSI has been telling you it's a strong market for a long time. So no surprise, trends up, RSI looks good. I mean, what's not to like, right? But it's not down here anymore. It's not a $220 stock anymore. It's not a $320 stock. It's way up here. And they got to keep making their numbers and they have to keep going, which obviously they can do. But there is a stall going on here, and it's either a pause to refresh, and we're going to go to 5,500 in the S&P, and this thing's going to be part of it, or it's a pause to refresh, and then they're going to say something happens to tighten up everybody's idea on earnings. Because as soon as they back off on their earnings story, then you're going to get people willing to grab some profits. Again, when you get up in this area and you're concerned that it might not take off, one of the strategies is blow out your stock position, replace it with calls. And then if it takes off, you've still got a position on the long side. Obviously not one for one as you had, but you can't get your cake and eat it too on everything. You're also going to be securing a whole bunch of money that won't be at risk anymore. You have opportunity risk. The way you're hedging the opportunity risk is using a call spread. All righty then. There you got Microsoft and Microsoft. What did we say on a 1 year basis? Yeah. So we said, yeah, you get underneath right here on a 1 year basis, it's 423. So you start breaking under 423, 421, it's going to start putting more pressure on the downside. It's been holding purple pretty good. Again, what I tell you about if they break the average, but the average continues to rise, this is called, in my opinion, in my view, a false move. And it's a great thing to jump on. So, when they do a false move and then it gets back above, it's a great time. And then the red line turns up, that's double a great time to do something. So if this thing is a false move to 430 and you start blowing out 423, 421 and it rolls over, then this area is going to be known as a good sell area. All right, what else do you got here? Microsoft, Google, Amazon. Can't forget the Magnificent Seven, can you? All right, so Amazon, again, let's look at them on a 5 year. Okay, they took out their highs by just a little bit. Then let's see what the RSI up here was at 60, 60, and up here was at 62, and up here it's at 76, and up here it's at 65. You got a little divergence, you got your pullback, right? Now, it's holding the green. That's good. And it's back above red, which is good. So when would you be concerned about Amazon? If it starts breaking under 182 and then 175 and getting these lines to turn down. On a shorter term basis, where are you here? You're at 72 and then you're at 61. That's a divergence. Boom. That's why you got the drop. Now it's coming back up. Is that an up flag down pole? We're going to find out soon enough. We'll probably find out once the Fed does their announcing on how many cuts are coming tomorrow, right? So if it does start breaking under what numbers? It looks they're all clustered, 181 to 183 ballpark. Start breaking underneath that, then you're going to get a more significant drop. And so we'll have to see. Like I say, the market is set up where it is still bullish. The market is set up where it could have a stampede still up towards 5,500. Cannot deny that. But would I be counting on that? No. If I own things, would I let them ride right now? Probably. Would I be concerned if it's rolled over from here? I would take some type of protective action. Okay, so there you go with the magnificence, and there you go with the major indexes. And now I'm going to float around a little bit to see if some of these things we hear about look like they're any good. Let's look at an oil stock like Occidental Petroleum. This is Buffett's favorite deal. And so let's see if it's got going. Now, it used to be 71 bucks, and now it went to 59. So this is why I find it interesting. Then I go to the 5 year graph, and I can see that it's really on a ledge here. So if this thing starts breaking under 59, I don't want any part of it. But people like Goldman Sachs are talking about $90 crude this summer because of demand and supply. If that were to happen, this stuff is probably going to go up. When would I be most interested in it? If it starts getting above what? 62, 61, 63, 64. Okay, because I'm only really interested in if it's going to 70 or 75, and that's not going to happen from where it is now unless it gets above this resistance stuff. So keep it on your radar, right? But keep your powder dry a little bit here, right? Because this thing could easily start breaking down, and if this rally we had in crude oil, which I'll show you right now, goes into the fade mode, then you're in trouble. So where is it doing today? Crude is still stable. Okay, so crude turned up. Let me show you. Crude went down all the way to like 70, right? Let's give you, yeah, it went down, got underneath the gold and everything, right? And now it's back above gold. So as long as it can stay above 76, then this thing could start getting good again. So that's why I would watch it very closely. But as you can see from the RSI, it's just struggling back to sea level, and sea level is being met by a guy's hands on their head at the blue line, and that's keeping the head underwater. So if you cannot break above 78.50, okay, and it starts going down again, and this RSI rolls over, and you start getting back under crude, 75, 77, stuff like that, then I'd be concerned that there's a more significant drop coming. Because again, outside of 70 here, which has been tested, right? Tested. If it were to break under 70, this is called the abyss. The abyss. So that's why I'm sure I'm not the only guy with a chart at OPEC who can see that if we break under 70, there's a problem. So that's another reason why it had support on the drop, because somebody probably doesn't want it breaking under 70 and going into the abyss, except maybe the Biden administration, who'd love to see gasoline prices go from 5 to 2. But that's the story right now. So Occidental, definitely keep an eye on it. What about the energy servicers? We'll take a look at Halliburton. Old Dick Cheney's big company, right? Okay, so on Halliburton, on the 5-year, what's it tell you? Okay, again, looks like it's breaking down. It looked like it's breaking down. So you got to be careful. Again, if energy breaks under, 75 and then 70, it's going to surprise a lot of people. And again, that's the direction it's trying to go. It is definitely oversold down here and possibly could have a little bit of a rebound, but it looks pretty weak. The other one that I was watching is Devon Energy. So if you're interested in energy, you think they're going to be better as the year goes on, this is the time, and I'll go over another couple that I think look very interesting. Okay, so this is Devon Energy, and they're more in line with the Occidental as far as, that kind of thing. So let's take a look at Devon. Okay, Devon is a very critical zones. Look at that. See, that's why I'm right on top of this thing. This is where it's got to stop. 46 bucks, no more. No, we don't want to see 45 or 44, because then it's going to go down here possibly. So right here, very interesting time to keep a close eye on it. Could be a heck of a nice little area. If you go to the 1 year, again, can you see it dumped under purple? Is this a false move? We're going to find out if it can get above what? 47.50, 48.50, 49. So if you can get that going, but these things are pointing down, and this is where you make money on the long side, when it looks like that. Not too much when it looks like this, until the red turns up, like down here. So patience is a virtue. My suggestion is go get some. Okay, so there's your energy deal. And then a lot of gas is being talked about as far as, because they need a lot of energy for these data centers, right? So I think gas might be a big factor here. And these two here are the ones that I've been liking for a long time. And, I've been holding on to for a long time. So this is called Range Resources. As you can see, it's been in a nice uptrend. It's certainly at a high point here, but it's still in an uptrend, nothing pointing down. And if these data centers need energy and gas is the energy, bingo, there you go. All right, and then Williams Companies, WMB is another one I like in that area. And you can see here as well, nice uptrend. I've owned it for a long time, and it is at a high point here. So is it going to pull back? It very well could. But again, both of these have nothing pointing down right now. I don't believe. Let's go to the 1 year. Yeah, nothing pointing down right now. So again, if this is the power source for the data centers or a big part of it, there could be some good demand for this stuff. So again, it's been very good to me, but again, I'm not loading the wagon at the highest point of all time. So, that's where I'm coming from. Okay. What do you call it? Icons buying into Caesars. Let's talk about some stocks that people are buying into. You know, the big boys. Last week, I think Caesars, he put a big position in there or they announced one or something. So let's see if that looks like it might have any hope. It had one day of a pop and then it went right back into the tanker. So again, it's more of a, I mean, everything's pointing down. So, from that standpoint, I have no interest. Again, you could buy into this thing and then you could get lucky that it goes up. But I mean, it can't even get above the red line, which comes in at around 37.5. So, until it got above 37.5, I probably wouldn't even put it on my radar. Another one was Southwest Air. And this is Elliott Company coming in there, and they're going to do all this shaking up and this and that. So again, it had a pop, and now it's coming back down right away. But again, if you can look at it over a 5-year basis, look, in 2020, the darn thing was at the same price as here. And so the RSI is picking up a little bit. It bottomed out at 40. So I would say 25 should be your worst case scenario if you wanted to actually pick up a little bit of this stuff. And again, it is trading above 27.72, at least for now. And let's just look at the other one here. But this is kind of like Pfizer. You're putting it away because you think it'll come back and you think Elliott will get the thing straightened out. But right here, again, there's all your, remember I said 27.75? Anything with a 27 number is the lowest you want to see. You start getting back under 27 and Lord knows where it's going, frankly. This could be a longer term situation like Pfizer. Pfizer just spent $43 billion on takeovers last year. So if they could get some action on that, that'd be interesting. See, here you go on Pfizer. So you want that Pfizer definitely holding above 28 bucks, 27 bucks. Okay, what else is going on here that I want to talk about? Biotech. Some people are thinking that Biogen might be able to get in on this Alzheimer thing. That Lilly has got stuff going on. So let's see if Biogen makes any sense. Okay, so on Biogen, you can see it's turned up. It hit the blue line. That's nice. It's up. So, as long as we stay above 220, it would be helpful. Again, it's, if we can get everything above the purple line, I mean, that's when you're going to be able to possibly blow out gold. Gold has been keeping a cap on this thing. So, again, when you're buying things that are way out of favor, you got to know the trends are going to be down, and that makes for a rough racket. So personally, I like to see a little bit more of an uptrend so I can join a crowd rather than try to create a crowd. Okay, so that was your biotech there and your casino there. And what about auto? GM starting to, it's very low PE. And people are starting to talk about it a little bit. Okay, again, it's broken out. I've owned this for a while as well. It's been doing nothing. Now it's starting to kick in. You can see it may have some pretty good potential. So again, this is something that, as long as it stays above 45 bucks, and on the daily chart, stays above, well, there you go, 44 bucks, 44, 45 bucks, then and it could pull back to where it broke out from 46. But if you bought it, you certainly wouldn't want it to stay above 44, 45. So that's the story on GM. What else did I notice out there here? Airlines we talked about. If you want to do a one-stop shop on, you go over to jets. I mean, travel is supposed to be, very good here. I don't know. These guys must not know how to run their businesses. The planes always seem to be packed. So it's like a restaurant always packed, but you're losing money. Again, you can see on the airlines, again, on jets, because this is a basket of them, you need to get this thing above 2050 to get moving. to get moving. All right. Now some cheapies. Let me show you a couple of cheapies here. On oil, rig. You know, some people like to buy things that are low priced and maybe will get to be a high price. Let's check it out. Transocean. Okay, so Transocean, you've got again, need to get above all these lines here to get going, but I'm seeing that the RSI is starting to firm up here. So you know, as long as we stay above the lows here, which is around $5.30, and if we can get above 575 and 6, we could make a run. But again, the gold has capped this thing so far. Get above gold, then you got something to talk about. All right, talking about gold, let's talk about a couple of stocks there. Okay. This is one that I bought at a very low level and it really took off for me. Harmony Gold. And Harmony Gold, as you can see, gave me a nice buy signal back here at the $4 area, which is where I took it. And obviously I've been riding it up all the time. Now it's having a big pullback. So if gold, which is has had a big pullback, if it's going to be able to find support at 2,200 or whatever, and then go back up, then obviously this is a stock I'll be interested in, particularly if it can hit 750. And then Newmont Mining. I'm going to show you a couple things that I did, what I had last week that I put on the week before, and why. So this is Newmont Mining. This is for your short-term traders, because you know you got the T-bills and you got real estate, you got your stocks that you're holding for the long term, and then hopefully you got a little thing called risk capital. Risk capital is where you're trying to take a small amount and turn it into a large amount, knowing that if you lose it, it's a smaller amount. Okay. Having said that, here let me explain what I was doing here earlier, about a week ago or so. Okay, I was noticing here on the monthly that it was running out of steam. So we went from there to 70, and then we went from 70 to 68, and then we go from 70 to 62. So I know it's running out of steam, but once the red line turns down, then I get an idea I'm going to take a shot at some puts. So I took a shot at some puts that only had a week to go, meaning last Friday they were expiration, and they were very inexpensive. And I got a nice little move down here to purple, and at purple I grabbed them and got out of there. Okay, so that's an example of how on a short-term basis, how I would trade something like this. Right now it popped back up here. So if you want to re-hit it up here, this would be a place to re-hit it. And then you buy your, add a little bit out of the money, put something like 41, and now you're in the money, and maybe you could actually get something to happen. Because if this thing does have a full-blown pullback, you can see that it could go all the way down into the 38 area, which means put options at 41 that go for 50 cents, can go to $2. And $2 is not bad for 50 cents, right? Okay, so that's the story there. Another one on the metals that I took a shot at here was the Freeport McMoran. And it was really the same story. You know, every Tom, Dick, and now, like I say, I am Tom, Dick, and Harry because I own this thing and I've been in it a long time. So again, I understand this was a great stock at 35 and 38 to reload on, and I understood it went to 55. But I also understood that this thing was running out of steam a little bit. So you got the, you know, the RSIs coming in here at 64, then you're up here, and the RSI is just identical to the gold. And then we go from 70, and then we're down at 59, and then it breaks under the red and it turns down. So you can take a shot at some puts. And you know, if you see it breaking down at 53 and you go with a 52 or 51 put and you go down here, you're going to get a big jump on that if it's a short-term put. So I used it, and then of course if it rallies and it can't, and these lines are pointing down, what did I say? This is all false, false. So these are good times to take another shot at the puts, and then you just got paid again. Then you rallied back up, take another shot at the puts, get a little paid again. And now again, it's back and forth. So again, Freeport McMoran was another one that had an opportunity on the downside, simply because, you know, when you got all the way up here to 70, and then you're up here at 63, and then you turn down here, you know, that's a good time for it to go. As long as it stays under 52 bucks, 51.50, 52 bucks, then this thing will continue to roll over to the downside, and your RSI looks like it wants to make a decision. It either wants to accelerate to the downside, which would mean something like going down here, or it'll hold down here in the 40 number and then get back above here, and then you could be back on the bicycle. So I'd monitor this very closely because it's an exciting stock. And obviously copper, what they tell me is obviously they're not making any more mines, and this is a product that people need. So this is something very interesting as well. All right, I am going to, Palantir. Last week, early in the week, I was looking at Palantir, and I'll show you where I came up with an idea on that. And again, when you're doing short-term options, I still look at the entire picture. So again, I can see this is still in an uptrend, right? So every time it went down here, it was a good time to buy, correct? So when it comes back down here, I'm looking to buy, not sell. You understand? And so that told me to keep an eye on it. Then I go to the 1 year, and that tells me, again, it's banging across purple, and it did this little stupid move, which is probably a false move. And then right here at 21, I say, let's take a shot. And that's where I got some calls. And then it popped all the way up here. Those calls obviously went up tremendously last week. Then we pulled back, and now it's back on the bicycle again. And again, this stock is very popular with people, with the AI stuff, right? They deal with companies and governments. So they have some pretty steady cash coming in. They're a profitable company. And, it has been as high as what, 20, years ago, it was 40. But I mean, this thing here, if it starts blowing out 26, 28, you don't know where it's going. So keep, this is one that I thought looked pretty good at 21. Obviously, it gets to 24, 25, 26. It's a different ball game than 21, right? Okay. I am going to go over a couple of commodities here, and crypto. I forgot to talk about crypto, and the interest rate picture. Boy, it's a lot to cover. Okay, let's go to gold. And a lot of people got into gold, and they thought gold will never go down because central banks are buying it, right? Right. Okay, but everything obviously reverts back to the mean at some point, and that's what you've just seen. So you got gold on a 5-year basis, and obviously you get in there against gold, you get in here or here, you get in here on the false move down to purple, and that's where your entry levels are supposed to be, maybe down against blue. Up here, you're not supposed to be just entering the market. Why? Because it's already made a big move, right? And it has the possibility of reverting back to the mean, which it already did back to the red line when it pulled back to 23.31. And could there be a more significant decline? It could be. It is holding up pretty good, though. Now, on the 1-year graph, obviously, the longer it stays under what? 2350 to 2380. Let's use those as wide numbers, 2350, 2380. These things will continue to matriculate to the downside. And this thing is under 50, but it is above 40. So this could be the low. And if we get above 2350 and 2380, it will be the low. If we can't, and we start blowing out 2300, it's going to open the door for the 2200 numbers. And again, if this guy talks tomorrow about no cuts, and this guy starts talking about the economy's too strong, or inflation's too strong, it might not be a friend to gold. Conversely, if he comes out with a white dove outfit on, then gold will fly, in my view. And again, you got a lot of sellers in there now who, just like on Apple, get a lot of people yesterday sold and sold short maybe, and they all had to cover today, and they didn't find a very good environment for it. Okay, so there's your gold. And then we already looked at oil. Now let's look at crypto. I use GBTC for my crypto. And it's starting to roll over big time. And I was trying to tell people that. So let's take a look. Okay. Okay, there's your 5-year graph. Okay. Up here, your RSI is 87. Here it is, 68. Look at the back. Now you run back up. Where'd you go to? 66. You're nowhere near 87. And now if it breaks under red, which is 59, which it's right on now, and it can get red to point down, there's a reversion to the mean potential. And if you look at this thing down here, that looks like a major divergence. Now, again, if they come out and play, we're not going to be, I mean, I don't think they're going to do like the ECB. ECB cut rates and then they spend 5 hours saying why that doesn't mean anything as far as any more cuts. I was in Europe, in Italy and Portugal. Those places are having tremendous money going into them on tourism. I mean, just ridiculous. And this was in May. What do you think June, July, and August is going to be like? And so I think, and they have room to raise their prices. I mean, sandwiches for $5 or $6 could easily go to $6 or $7 or $8. So the bottom line is that I think the ECB may have prematurely did that cut, which I think they almost sounded embarrassed that they do it. And so anyway, grayscale. I mean, this Bitcoin, it obviously has to get back above 65 to go anywhere. And it has to be accompanied by a stronger RSI, in my view. So if they just bring it up there for like a day and then tank it again, well, that will really tell you they're topping it out. Again, I'm not bearish when it's going up. You understand? Right now, I'm not even bearish at all either because nothing's pointing down. But I'm certainly not loading the wagon up here. If it's going to go to 75, it'll go there with the stuff I bought down here. Now, the thing here is under 61, which it's under, so it's already started to make its roll. And you did have a what? 61 here and 60, 58. So it can't get through those 60s into the 70s or 80s on the RSI, which means that there couldn't be an acceleration phase ahead, which means what? It could be topping. So you got to be careful. Ethereum. ETHE. Okay, look at it. You know what I mean? That's why you don't want to be fooling around at the top because, again, where do you get? You got RSI 74 and then you get RSI 77. That's good. But then you drop to 73 and then you drop to 66. You get under the red line, which came in at 34.80. And you're going to get there's nothing underneath it till down here. Again, these trends are still up. That's why you hear people saying the market is oscillating on the S&P. The market's oscillating because there is no downtrend. The trends are still up. But if you oscillate and then get good news, you go on another leg. If you oscillate and the news turns, that is the initial process of turning down. So oscillation is either a prelude to another rally or it's a prelude to rolling down. And you got to follow the trends and you got to follow the numbers. So on Ethereum, did it break the downside? Yes. Is it got support underneath? Sure. On a 5-year basis, though, I mean, to give you a little bit, well, it doesn't have a good chart for a 5-year because it hasn't been around all that long. So again, if somebody said, when would you be interested in Ethereum? It certainly would be as it broke above 35 bucks. Up until then, I'd be more interested at 30, 27, or 25. Okay. This week, what did I focus on this week? It was Apple. Why did I focus on Apple? Because they had a big conference yesterday. And some people said it was a snooze fest, and that's what made the stock drop. And then the people who know something about what they're trying to do, which is basically take AI and put it to the everyman as opposed to the corporations. And when you have 350 million people who can only get the stuff if they have 15 or better on the iPhone, and you know how people are with these iPhones. I mean, I think some of their identity is linked to the iPhone. So in fact, Buffett made a good comment. The reason I know these guys have got product loyalty, if I go up to somebody and I give you $10,000, but you have to give me your iPhone, the people will say, no, I'll keep my iPhone. So the bottom line is if they put something in there that people like as we go into September, then you're going to get people who say, hey, I got the 16 and it's got all this neat stuff on there. Like, do I think emojis are important? No, but I don't think TikTok's important either. And that means I'm not the norm out there. So the bottom line is the norm loves all this stuff, right? And so when this girl tells that girl that they've got this, and then the guy wants to see it too, the next thing you know, people are going to reload possibly. That's what people are betting on today. So what did I do going into today, going into this week? I took a shot at a couple of calls and puts. Why did I do a strangle? Because if that thing went badly, and it looked like it was going badly yesterday, right? I mean, the thing went from like 96 down to 92. It blows out 90, the thing's going to fly. I'm in a window of 200 on the call, 190 on the put. I got about $3. I got 2 weeks to see something happen. What happens? Well, starts going down. I'm thinking the puts is the winner. I wake up today, I see the calls are going through the roof. So my $3 just on the call side is probably doubled and counting because this thing is moving. So why did I do the strangle? Because I thought both sides for $3 was a reasonable price. I thought that coming out of this meeting, I thought something big might happen. Either A, it's a dud, like people said yesterday, or people are going to say, Apple knows what they're doing. And all these companies are going to have to go through them to distribute to those 350 million phones they've got. And they know their customer. The customers, want Siri to do better. The customer wants a little different emoji or what. I didn't look at the whole report, but whatever they're doing, they know the customer. They know what turns on the customer. They know how they can get the customer to possibly reload into new phones. That's what they're doing. They're not guessing. Again, and that's why you're getting the move up, because if they could get a reload cycle, obviously the revenues could jump much more than people think. I think they're talking about 6% growth next year. And now after this thing, they're talking about 10 or better. That's why the stock's taking off. Okay. But whenever I do anything on the options, I always take a peek at the strangle, because when you're wrong on things, you tend to be very, very wrong. Correct? So a little insurance on the other side, because if you're right, you're probably going to be very right. And giving up a little bit of money on insurance is okay. Because even if the insurance only works one out of, I'll just give you a chart that might give you an idea why insurance on some of this stuff. Insurance means you're going to buy an option, and just like any insurance, if the move doesn't happen, you lose the premium. Now, I'm going to show you something on something like AMD, not Agilent. Okay, so this thing's up at 230, right? Now I don't know what the premiums are. The big factor about strangles is you can't be paying $50 on each side, and the stock has to go to $200 up or down in order to break even or something. You know what I mean? So the bottom line is that in this particular case, say you took a shot at the calls at 230 when it was at 220, and then you took a shot at the puts at 210. Let's say, for argument's sake, you went out till the end of the month. Maybe you put up, I don't know how much you'd have to put up, just an example. Let's say you had to put up $20. Well, you have the right to sell at 210. And if you gave yourself a couple of months, it dropped all the way down to 150. So that's 210 minus 150 is $60. You put up $20. You lost on the calls, but you made a lot on the put. So if you can find something that's going to be very volatile, the strangle makes a lot of sense, particularly if you might be dead wrong. Now, the other thing you have to remember is the risk on strangles is if it stabilizes and it stays between the 2 points and the time runs out, you're a loser on both sides. Okay. So you definitely need volatility. That's why, sometimes around earnings or events like this, or I think Palantir had a deal last Thursday. If you can keep track of events that are coming up, earnings announcements or big conferences, you might be able to use that as a screening guide, or you can just use technical analysis, and use that as your screening guide. Because like I say, when these things start to move, just on a Freeport McMoran to give you an idea, say you get a turning down here and you go, you know what, I think it's really going to go. I think I'll buy the 40 calls. Well, say you bought a 37 put just as insurance. Okay. Well, if it goes up like this, Yeah, you're going to lose on your insurance, but you're not going to care that much because you're going to make a pretty good hit on the calls. Now, if you get into something like this, where it's up in the 42 area, and you bought a 44 call, and you say, "What the heck? I'll buy a 30, I'll buy a 40 put," and you think it's going through the roof because it looks like it's going through the roof, and all of a sudden it goes down to 38. Well, that little insurance put you bought just saved your butt and probably made you money. So again, that is an example of why sometimes I use the scramble. Not all the time, but sometimes. Okay, one last thing on the 20-year note. Let's take a look at it. I'll give you an idea. This is on interest rates. Okay, right now yields are dropping a little bit, right? But they're dropping before the Fed meets. Now, here's the deal. If we can stay above 90, and he comes out with some kind of an optimism that rates might drop, then this stuff can rally again. And if it takes out 94 and gets above purple and gold, then the concept of duration might come into handy. Because if they get above gold and purple and you get under 4.24% on the 10-year, then maybe it's a situation where these rates are turning. If not, you can see purple and gold are controlling this thing. And so as long as we're under 94, 93, then anything that it rallies could fail very easily. And on a longer term graph, but you can see it's trying to turn. So again, this could be telling us that it's going to be a moderate report out of this guy tomorrow, and it could be very helpful for stocks and gold. So keep an eye on that. Okay. All right. Right now, I'd just like to explain how I can help you. Okay, I'm Jim, the option professor. I hope after listening to me, you have an idea that I have some experience and knowledge, and I have a lot of knowledge and experience on how to trade the options, different strategies. After you get in them, how do you get out of them? Where's your entry point could be? How do you figure out the trends? What is momentum? How does that help? Again, I'm not boasting here, but I think I know quite a bit more than most people in this subject matter. So what do you want to do? You want to get a hold of me and we can talk. How do you do that? You go to the website, option, OPTION, professor, PROFESSOR.com, and you put in your contact information and we'll talk. I'll explain how I can help you with my timing indicators and a 1-hour online session where we go through your challenges, your markets, your ideas, and I share with you my own as well. It's a very, very good deal. I know you guys have been charged thousands of dollars on all kinds of nonsense. I can't help that, but I can tell you what I charge is extremely low, especially for what you get. The other thing is, are you just starting out? Hey, I've been doing seminars for decades. I know how to explain this stuff to people who are just starting out, and I can make sure you get a pretty good idea of how it works. Rather than reading 9,000 books, or in addition to reading 9,000 books and going in 9,000 directions. If you're experienced, I don't know how experienced you are. I know if I had an opportunity to hear the methodology and the ideas of somebody who'd been around a long time, I would definitely check it out, particularly if I had a decent amount of money. Again, a lot of strategies that are out there with the writing strategies have a very limited gain and have a very large loss potential if you get hit. Obviously, in some of these strategies, you don't get hit very often, but when you do, you get hit pretty good. So if you're trying to turn a small amount into a large amount, it may be difficult with that type of strategy. So I like to talk to people about the shorter term options for people who like to speculate with smaller amounts of money. I'll explain that during the session that we can have. I also have an email address. You can shoot me your email with your contact information, and that's the fastest way for us to contact each other and see if we can help. That's option professor, OPTION, professor, PROFESSOR.com. And just shoot your at gmail.com. Yeah, optionprofessor@gmail.com. One guy had a quick thing on Tesla. Let me see if I can hit that real quick for you. Hold on. Let's take a quick look at Tesla. Okay, here's a story on Tesla. We go out to the 5-year graph. What's it tell us? It tells us it's in a downtrend. And it's been going down for a long time. So once it got under purple, the bears are controlling it, and they've been controlling it pretty much since last year, except for this short period of time. So again, they're still controlling it as we speak. Not much good to talk about it. If we got above 200 and 220 and this RSI got back above 50, then it would open the door to making some good money on it. Other than that, it looks like it could actually come back down even further. Where could it come back down to? How about $100? So if it wants to go into a give up phase, now right now the RSI is at 40, so it could be at a low. But if we break down and this RSI on the long term starts breaking down, then $100 would be the place where I would think it could go. So there's some significant risk if it starts breaking down. Here you go again. Where's your red line? It's at 171. So if we stay under 171, your RSI is at 40. I'm telling you, it's crunch time for this thing. If in fact the stock starts breaking down, and certainly if it breaks 140, I wouldn't be surprised if it goes down to 100. And when would I be interested in it? At least get me back above 195. At least get me back above 195. It's holding on for dear life on the red line. Red line comes in 171. And there it's breaking down. So again, you understand why I want it to get stronger? Because right now the momentum is down. I don't want to catch a falling knife. Is there a gap down here for it to be filled? It certainly is. Does that look like it might want to go down there? Yeah, that's between 145 and 160. Okay. Whatever stock you're in, whatever you are doing, again, shoot me an email. I'll explain how I can help, and we'll take it from there. Again, I was sharing my opinions with you today, certainly not giving you advice. I don't know you well enough to give you any advice. Your advice is supposed to come from your brokerage firm after they consult you on risk tolerance and suitability. Okay, this is Jim, the Option Professor. I hope you take advantage of being able to talk to me. OptionProfessor.com, put the information in, or better yet, shoot me an email, optionprofessor@gmail.com. All right, guys, good luck and good trading. Tomorrow's going to be a big day, you know it, and we'll probably get some good volatility, so that's exciting. Talk to you later, and again, shoot me an email.